Welcome back to the Crypto's Key conversation. And this one, I'm going to try to be as brief as possible, but there's some stuff I want to cover. So, there's been a lot of talk within the community in regards to the Ripple versus SC case and how it's truly going to set precedent for the entire space. And when I talk about that in regards to this channel, we talked a lot about how Gary Gensler and the SEC are really going gung ho on trying to like over regulate by enforcement the entire space, not just certain digital assets like XRP and the company Ripple and so on, or library, but like actually going after like platforms, whether it's a lending platform, an exchange, or whatever the case is. They're trying to attack everything. And we were talking about how, yeah, you can sit here and paint a broad brush on projects that are obviously under the microscope and under the scrutiny of the SC right now. And you would think that your project is safe because you're not being attacked by SC, but that's not the point. They're just literally picking off these companies one by one. They're coming after these platform digital assets one by one, and they're only gaining momentum in that sense. It's almost like a snowball effect. So that's why it's so important when it comes to this Ripple versus SC case that Ripple really does a great job and they win and they're successful, because we don't want the SEC to have more power to overregulate and dominate this entire space. So in this video here, we're going to be covering a couple tweet threads here that's kind of covering what Gary Gensler and the SEC are actually trying to do right now, which is quite interesting. And we're also going to be taking a look at what's going on with some of this Bitcoin adoption, crypto users, comparing it to the internet. We're also going to be taking a look at some good news. Gatorade trademark applications hint at joining the metaverse. So obviously we got more people coming in. Kraken NFT Marketplace opens waitlist for beta. And then I talked about how we were going to cover the ApeCoin stuff. And obviously, Yuga Labs had their, I think it's Other Deeds NFT launch. And there was a bunch of backlash and speculation that was going on. Here goes an updated article from Cointelegraph that we're going to cover. And so on. So this one's going to be a good video. Really pay attention and really take into heart kind of what's being said here, because this entire market is truly going to be infected by the power and influence that SEC has over it, especially with there not being true regulatory clarity or a true government organization to roll out proper and ethical regulations for this space. So it's kind of just like a toss up of who's going to dominate and who's going to control the space right now, which is kind of crazy. But coming over here, CoinGecko, we're currently sitting at a 1.79 trillion dollar market cap, currently down 1.7% for the day. And obviously you can see there's a lot of red. Bitcoin sitting at 37,659. Just yesterday we were at 38,500. Ethereum sitting at 2,768. XRP sitting at 60 cents. So obviously there's a lot of red in the market, and it's I can explain a little bit about it. Looking at the gainers, I don't know what Frax shares are, but it's 11.4%. Algorand actually had a huge pump, like what was it, like yesterday or something, but they were up like 19% or something crazy. So Algorand has a partnership. I think it was like a FIFA partnership or something that happened. But there's a little bit of gainers within our market. Coming over here to the Bitcoin Fear and Greed Index, we're currently still in this fear range. We're sitting at a 27. We were just at a 28 yesterday. We're currently down a point. So obviously there's a lot of uncertainty, market uncertainty, not just in the crypto space, but in other markets, especially when it comes to like what's going on, geopolitical stuff, obviously Russian-Ukraine invasion stuff, especially when it comes to the United States. You have inflation. Jerome Powell and the Fed, they have the FOMC meeting, and we're going to have the verdict of what their tactic and strategy is to combat inflation when it comes to the interest rate hike. So there's been a lot of talk of them doing the 50 basis point, going up 0.5%. So, but also there was actually some conversations that I was kind of reading into. They were talking about potentially going up 0.75%, so 75 basis points. So who knows? When it comes to the 50 basis point, it's been known that that's kind of the more hawkish approach that they were going to take. So it's kind of been priced into the market. So if they come out with a decision saying, hey, yeah, we're going to go up 0.5%, 50 basis point, then we could see some positive price action within the market, because it's already going to be understood and priced in. Now, if they go, obviously, if they go below 50 basis points, obviously that would be positive as well. But now if they go over, then we can definitely expect some more turmoil within our market. So it's just kind of a waiting game to see what they decide tomorrow. But let's just quickly jump into the topics of a discussion. Okay, so I think this is going to be a solid video, and it's just going to highlight how important it is that we realize that we as digital assets, crypto investors, we have to realize we're all on the same team, especially with these unclear, not having regulatory clarity in the space. We have to realize we're all on the same team, and we want the health and wellness of this space, so it can grow and be prosperous and flourish heading into the future. So this is from James K. Filan. Just an update from the Ripple versus SEC stuff. It says the court has granted the Ripple defendants' request for an extension of time to respond to the SEC's claims that the Hinman documents are protected by attorney-client privilege. The response is due by May 13, 2022. So obviously, if you've been following the case, at first they're saying no, the Ethereum free pass speech was, Hinman's personal opinion. Then they came back saying no, it's part of the DPP. Now they're saying that, there's attorney-client privilege, so we can't, give that information out to Ripple, which is obviously crazy. They're just literally delaying the inevitable. XRP Critical says Ripple lawyers only requested a 9-day extension, so they must be writing up something real good. And they have Jim Carrey from this is Bruce Almighty, the movie. Moving on. This is from James K. Filing as well. It says the SEC requests permission to file a reply brief to the Ripple defendants' May 13, 2022 response regarding the SEC's attorney-client privilege claims in connection with the Hinman documents. Ripple defendants object to the SEC's request. Coming down here, XRP Critical says the SEC does absolutely everything to try and delay the XRP lawsuit. Why won't they stop being petty and just sit down with Ripple to settle? And I 100% agree. It's like, hey, the writing's on the wall. We all see, what's happening. You're literally just further and digging your grave and your hole deeper, which is crazy. But that's their tactic: delay. And then you have, Chairman Gensler, Gary Gensler, in an interview, he was saying justice delayed isn't justice denied, or is justice delayed is justice denied, right? That's what he was claiming. But clearly in the Ripple versus SC case, it's delay. So clearly justice denied. Kind of contradicting himself, talking about, you're here for investor protection. No, that's not the case, man. You're destroying investors' lives, especially, sadly for the ones that sold out of their assets due to fear, based on the hammer that you dropped on the Ripple company, which affected XRP, the digital asset, which is absolutely tragic. He continues here, says, in a power move to rule the entire crypto space, sideline the CFTC and preempt congressional action regarding what agency should oversee crypto markets, Gensler nearly doubles the size of the enforcement crypto assets and cyber unit. So he's literally going full steam ahead, trying to, further, over-regulate by enforcement. XRP Critical says Gary Gensler is a power-hungry dictator that is completely obsessed with ruining the crypto. So this is kind of tying into now we're leading into not just what's going on with, Library and the SEC or Ripple and the SEC, talking about the entire space, how now they're going after, obviously they shut down Coinbase and their Lend product. They went after, what was it? Was it BlockFi? They went after BlockFi. I forgot the other exchanges or those platforms that were offering yield or interest based on holding assets in there. They're coming after everybody. And we talked about this since the beginning of this channel. So right here, Attorney Jeremy Hogan says SC hires 20 more lawyers and staff to crack down on crypto abuse, but fails to hire a single lawyer to draft clear regulations as to what quote unquote abuse is. The new lawyer training process must be very difficult. SC nearly doubles crypto unit. So coming over here, right here. I like this too right here. This is from Cryptic. He says, agree, and why they can't hire a team to actually write up clear regs. However, there are countless projects in crypto that were legitimate scams, illegitimate hacks, rug pulls, unregistered securities, Ponzi's, etc. A lot of people should rightfully be investigated. And Jeremy Hogan says, I receive emails weekly from people who are scammed, etc. And many are horrific stories. Why isn't prosecuting fraud against retail's first, second, and third on the SEC's crypto agenda? What emails I've never received? Quote, help. I was sold an unregistered security, not one. So true. I mean, even me personally, my time in the space from late 2017, early 2018, and to now, there's been times where I've been rug pulled and scammed in certain projects. Obviously, I invested it based on the knowledge that I had, but yeah, they were clearly scams and just quickly trying to turn a profit for themselves. So there's thousands and thousands of investors out there that are actually dealing with that even still to this day, especially when it came to BSC, the Binance Smart Chain. I know there was a lot of projects that were spun up, within like 5-10 minutes. They would have multiple a day that would literally just flip profit and rug pull the investors. So it's crazy that they are going after legit projects like Library and Ripple that are completely transparent about what they're doing and trying to, play by, the rules of the land that they are aware of in regards of, regulations that aren't so-called place for the crypto space. It's absolutely sickening. So here goes Congressman Tom Emmer, which Congressman Tom Emmer and colleagues had sent a letter to Gary Gensler about kind of his actions in regards of him regulating by enforcement the space, and apparently he hasn't responded to it, and he got called out by Tom Emmer in a tweet. I want to say maybe a week ago, maybe a few days ago, I can't remember. But now Tom Emmer saying, I wonder how many taxpayer dollars are being wasted in Gary Gensler's personal crusade against the crypto industry. I mean, isn't this crazy? This is a congressman calling Gary Gensler out, and this isn't. I got some more crazy stuff that's coming in regards of like people in his own circle that's a part of the SEC are calling him out, and they've been calling him out in the SEC's action. It's absolutely crazy. Right here, Stefan Huber had posted. He says, "Will the SEC finally crack down on Ethereum? Look at this." So before I continue, and I've said this before, I'm a huge investor in Ethereum, and I value Ethereum. Obviously, it has its negatives, just like a lot of other projects, and things need to be fixed, right? But not when it comes to the shady behavior behind Ethereum, how it was launched, the disguised whales and Ethereum free pass, and how all this ETHgate scandal stuff is happening. I don't like none of that. That's just affecting the entire market in general, especially the investors like myself that are in Ethereum. But this is from the SEC nearly double size of enforcement crypto assets in cyber unit for immediate release. So if we come down here, it's talking about how they're going to be focused on investigating securities laws violations related to crypto asset offerings, crypto asset exchanges, crypto asset lending and staking products, decentralized finance platforms, which I don't know how that's going to work, non-fungible tokens, NFTs, and stable coins. So do you see anything about securities? Any verbiage behind securities? I guess they expect us to kind of throw that language within these topics, but there's nothing specific about going after unregistered securities. But clearly they've been going after these lending and staking products. They don't want you, whether you're in the United States or whatever case, especially United States investors, they don't want you to take your hard-earned money after you paying your tax and the little bit of money you have left over and you invest into the crypto space. They don't want you to be able to take that money and leave it on the platform and earn 4 to 10% or whatever the case is, interest on your assets for holding it on that platform. They want you to keep it in your bank account when you're earning, less than a percent, way less than a percent, which is absolutely crazy. So you have inflation eating away at your dollars being held in your savings account, and then you're earning nothing. You're earning pennies. But you can throw that in, a crypto platform or a lending platform and stake your assets, right, and earn a different, a more yield and have more. You're more enticed to, put your money in so you can earn, a yield on that. But they don't want you to do that though. They're trying to protect you, which is absolutely crazy. And I know for me and my family, that's sickening to know that this is our reality. It's absolutely crazy. J.W. Verrett says it may even help if they focus on rug pulls and actual fraud, but they don't. They target big players with robust in-house counsel who commit zero fraud like BlockFi, simply to go after a deeper pocket and get a bigger fine. And it's clear. I mean, that's no secret. This isn't unfounded speculation. It's happening. And it's happened time after time. I've already told you about it. You got BlockFi, you got Coinbase Lend. Before they even started, they were shut down. They were going after, Crypto.com ended up having to, I want to say they had to change, their lending or, their lending policies or whatever the case is for the assets that they were staking under Kronos or whatever it's called. Like, no one is safe, and people need to understand that. We need to stop this divide in our community and realize that we're all on the same team. So we need to make sure that we band together, stand together for this unfounded, over-regulation by enforcement, which is crazy. Continuing on, Johnny Deaton says, remember my prediction of an exchange being sued by the end of the summer. When it happens, I'm not clairvoyant. It was 100% predictable after reading the complaint filed against Ripple versus SEC with the shady way the case was filed on Clayton's last day after meeting Gary Gensler. And then Tim says, you just call it like you see it. Anyone could see it coming from a mile away. No one is safe with Gary Gensler in charge. We all need to band together for everyone's future with crypto. Boom. Tim, let me go ahead and like this. Tim hit it on the head, and I'm going to even share this. This is awesome. That's literally how I feel. I mean, based on, all the knowledge I have being in this space every single day, that's literally how I feel. Coming over here, Library has something to say. So he says this from Library, and they're actually being sued by the SEC as well. So the SEC getting publicly dragged by its own commissioner. Even by government standards, the SEC is a special class of dysfunctional. So this is Hester Pierce responding to the U.S. Securities and Exchange Commission's tweet here. It says, today we announced that we are bolstering the unit responsible for protecting investors in crypto markets and from cyber-related threats. The newly renamed Crypto Assets and Cyber Unit in the Division of Enforcement will grow to 50 dedicated positions. Hester Pierce says the SEC is a regulatory agency with an enforcement division, not an enforcement agency. Why are we leading with enforcement in crypto? That's a great question, Hester. That is a great question. This is the SEC that is so hard and they're there to protect investors, but they're not. They're hindering and stifling the innovation. They're drawing, entrepreneurs and investors outside of the United States. All that money and potential and innovation is being pushed out of the United States just based on this one agency alone, which is absolutely crazy. They're not protecting me. You're not protecting me and my family. You're absolutely hurting me and my family. And I've said it before on this channel, and I'm gonna keep repeating it from time to time. It's like my wife and I have been buying, accumulating, hodling XRPs, which is one of our biggest investments in the crypto space. We've been doing that since late 2017, early 2018, and we rolled all the ups and downs of the blow off top and the bear cycle and all that stuff. We've been riding through all that, and we had plans for taking profit on some of our investment. But it's like when we got hit with this lawsuit, and now we're seeing that this lawsuit is spilling over into other platforms and other assets. They're only hurting families like my own, which is absolutely crazy. You're not protecting anybody. Moving on, this from Blockworth says, Coinbase CEO, in 10 years, 1 billion people will have used or tried crypto. And I think that can happen sooner than that. I mean, things are happening pretty fast. I mean, there's a big difference from 2018 till now in regards of awareness, adoption, more eyes. I mean, you have partnerships with FIFA, partnerships with the NBA, the NFL, NFTs hitting mainstream pretty hard. You got movies and documentaries being developed. There's so many more eyes on crypto right now, and I think it's just going to happen at a more rapid rate. And I can kind of prove it here based on the data that's been pulled up here. This from Documented Bitcoin says internet users in 1997, 140 million. Internet users in 2007, 3.7 billion. So that's what, a 10-year period. Bitcoin users today, 140 million. So coming over here, if you look at they have the total global internet users from 1992 to 2006. This is the white line, right? Massive growth. Then you have the total crypto users, the millions, right? So it's got this orange line. Look how it just broke through that, and look at the trajectory. Look at the direction that it's headed. I mean, this is crazy. We are early. We're super early. Adoption is happening at a massive rate, and year over year, we're just going to see this line keep increasing, which is absolutely crazy. Comparing crypto to the internet and seeing where it's at as an adoption and growth, that is super exciting. And I am so blessed that we have the opportunity to be in this space. Now we just need regulatory clarity by the proper agency that knows how to regulate this space fairly and ethically. I like this as well too. Bitcoin and liquid supply. So we talk about a little bit about this because they're talking about like a supply shock, and obviously the big thing is Bitcoin being scarce. There's only a set supply. Some of it's being lost. Some of it's locked up with Satoshi's wallet. There's a lot of different stuff. And when it comes to the exchanges, obviously when Bitcoin's mined, a lot of these mining companies aren't necessarily selling it. They're actually just, borrowing against their Bitcoin, so they're holding it. So then you have that. And then the Bitcoin that does make it to the exchanges, a lot of it's being bought off the exchanges and being stored into cold storage. So instead of having, a solid amount of Bitcoin being on exchanges to be bought, that is decreasing. So the illiquid, it means like not enough. The amount cannot meet the demand. The supply can't meet the demand. So if we were to go in and say, hey, we want to buy 1,000 Bitcoin. So say, there was only, 500 Bitcoin on, a certain exchange. That is going to increase the price because the supply cannot meet the demand within the community. So this is absolutely positive in Bitcoin's regard. So we know that Bitcoin leads the market. So this is actually super bullish. Obviously there's people that are seeing the writing on the wall, so they're continuing to accumulate and getting their positions. And obviously, this is probably, you know, a lot of big whales, a lot of Michael Saylors of the world, and the, you know, Elon Musk and the Teslas kind of buying in, putting it on their reserves, which is crazy to see this. So it's hit it. I think it's hit another all-time highs. What they were talking about, illiquid supply is reaching a new heights. That's crazy. Moving on here, it says Gatorade trademark applications hint at joining the metaverse. Should Gatorade go meta? It may join a number of major food and drink brands exploring virtual offerings, including Coca-Cola and McDonald's. So coming out here, obviously we were talking about like, you know, Walmart setting trademarks. Obviously now you got Gatorade, McDonald's. Everyone's trying to get involved into the metaverse. This is from Josh Gerben. Getting dehydrated from a workout in the metaverse, Gatorade will have you covered. Per a trademark filing made on April 27th, Gatorade plans to soon offer virtual beverage products. So just more adoption, you know, more eyes, more people jumping into this metaverse narrative. Kraken NFT marketplace opens waitlist for beta. According to the exchange, users will not incur any gas fees for trading NFTs custody with Kraken, only transferring tokens and NFTs off the platform. So obviously, this is absolutely huge. We were just talking about you know, ApeCoin and Yuga Labs, other deeds, NFT stuff, and obviously there was gas fees in the, you know, 6,500, 14,000, like crazy gas fees. I think one of the lowest was like 400 something, average like in the 700s or something. So to be able to you know, utilize this platform and not incur any gas fees is absolutely bullish. This Kraken NFT is coming soon. Explore NFTs and curate your dream collection with zero on platform gas fees. That's super bullish and super positive. So right here, ApeCoin integrates with Polygon amid NFT mint backlash and speculation. ApeCoin DAO, so decentralized autonomous organization, board member Yatsui Siu or Yatsu said there is currently no discussion regarding an exclusive chain for Ape. So the conversation I was brought up yesterday, the community was. They felt like the narrative was already put in place in regards of they were already kind of trying to set everything up, knowing that there was going to be problems. And I'm just going to throw the word fail out there just to kind of paint a picture. But they were pretty much like everything was cohorted this way so they can throw out this idea of, you know, migrating to their own chain. So I think they're responding to it right here. It says, we're sorry for turning the lights on Ethereum for a while. It seems abundantly clear that ApeCoin will need to migrate to its own chain in order to properly scale. We like to encourage the DAO to start thinking in this direction. So they felt like it was part of their, you know, they coerced or misled the community to fit their narrative in regards of creating their own chain. So this is from Yatsu. It says, following the other side or other D's meta mint, we saw a series of reactions and discussions in and around the ApeCoin community, including that Ape should move to its own chain to limit issues with gas fees and scaling. Let me step back and provide some clarity and context. So without going through his tweet thread series, someone's named MetaMan says, I fail to understand how this provides clarity. Reads like further obfuscation. So basically this means it makes it unclear, more unclear. He says, why can't Yuga admit what everyone in the space knows? They messed up. The smart contract wasn't optimized. The KYC free-for-all was a bad idea. The initial response blaming Ethereum was absurd. So we're going to continue to, you know, see how this thing, you know, unveils and rolls out, you know, moving ahead, see how they kind of handle this within the community. But yeah, there's been a lot of backlash with it. And obviously there was a lot of this mint was absolutely massive. There was a lot of, you know, gas fees incurred. There was a lot of money being made in this. It's crazy to see that there was actually community members paying, you know, 2 to 5 ETH for gas fees to be a part of this. It says with an estimated 300 million in sales. Absolutely massive. I wanted to end on this. It says Vitalik Buterin, the cost of sending ETH and swapping tokens need to be below, I want to say, what's that, 5 cents to be truly acceptable. I mean, don't you think? Yeah, I mean, me and myself, I think we pushed over 10,000 in fees during my time and, you know, getting involved in NFTs and moving money here and there. Like, it's crazy. Like, it's crazy how we almost like normalize we have to pay to play within the Ethereum, you know, the Ethereum ecosystem or the Ethereum network. And that's just kind of, it's like almost normalized, which is absolutely crazy to think because there's other chains out there, other networks out there that are faster, more efficient, and they don't require pretty much anything. It's pennies and fees, which is absolutely crazy. But all in all, you know, I'm sorry this one was a little bit longer than I wanted it to be, but I thought this was a great video to kind of talk about the whole topic of, you know, no one's safe. You know, we got to stop the divide. We got to come together because we're all on the same team, okay? With all that being said, stay strong out there. Be safe.